Top of the morning to you. So, market's currently open. This is the first time market's open, and we're taking a look at this Investopedia stock simulator here. One of the stocks that I've been looking at here is Wells Fargo and Company. As you can see here, they hit a high in January 2018 of $66. More recently, their more recent high has been about 55, $60. No, a little bit under $60 actually. But then you can see here on the dividend drop, and coming into January, February of this year, they had a huge drop in their stock, most likely due to the coronavirus stock drop and the fact that there's a lot of money that isn't being made right now due to the coronavirus. That being said, their dividend rate is the quarterly dividend is 10 cents a share, so it's a dividend stock. Um, well, 10 cents a share annual for 40 cents a share. We're not sure where that's going to go. The stock trades ex dividend August 6, 2020. So if you are the owner of record, you will get some kind of money back for owning a stock. And the next time it pays that dividend is on September 1st. Earnings per share of 87 cents. Market cap of something like, if I remember correctly, the market cap for Wells Fargo and Company is $99 billion, which is insane. So, why am I looking at Wells Fargo and why am I looking at Wells Fargo now? So, if you look here, Wells Fargo recently traded for a low of $22. The current stock price is $24 roughly. And at $24, this stock is an absolute steal compared to the previous several years. This means that once this coronavirus no longer affects the financial market, we're talking about potentially gaining 100% on our money once we get up to $50 again. So I will definitely go ahead and look at this stock as one of the stocks I want to purchase and hold for the long term in my stock portfolio. Now, while this stock may not have the most explosive growth, buying and holding Wells Fargo, which is one of your several um, Federal Reserve banks, actually gives me a lot of stability in my stock portfolio. This is going to be, we don't see Wells Fargo going bankrupt anytime soon. And it's going to be amazing when the stock does come back and recover. Also, Wells Fargo is most likely one of those banks that's too big to fail, so the government may do a bailout on this bank if things get really hairy. But we have yet to see what happens with coronavirus in the near future. But I just decided I was going to look at Wells Fargo and Company, with our current stock price being roughly about $24. I'm going to go ahead and take this simulator here, and I'm going to go ahead and trade this stock symbol WFC, Wells Fargo and Company. It's now trading at $24.26, and I'm going to put in a market order for 1,000 shares. Now, this is me making a bet. I'm going to do 1,000 shares at market order. Now, worst case scenario, what this stock will do for me is go up in value over a long term. But what this does is allows me to keep my money in a stock that I believe will be stable over time and will increase my return via dividends consistently. So every quarter I'll be paid a dividend, and this will actually help me. So that 10-cent dividend, while it may not seem like much over the course of the 1,000 shares that I'll buy, will come out to be a $10 dividend paycheck every time. And I'm going to go ahead and put a limit order on this of what my current quote is 24.26. Let's go ahead and put a limit order on this of 24.30, just to make sure that I get it in, and I don't end up paying too much for this stock, because paying too much for a stock is dangerous. Although, at this price right here, $24 a share, this is a steal for this stock right now. And a lot of stocks are looking like this right now, with coronavirus being a major factor in what their stock prices are looking like, because their first quarter numbers have been hit, their sales numbers have been hit. It does not necessarily mean that the underlying value of that company is bad. It just means that this company isn't making the profit it normally has, and the stock prices are reflecting that. So, day order. There we go. Limit order 2430. 1,000 shares. Preview order. And I'm going to go ahead and submit this order right away. I don't want to miss out on this stock at this extremely low price by comparison for the past 52 weeks. Now, looking at this, I'm going to take a look here at this Brooks Automation and see what Brooks Automation is doing, why they gained 15%. Oh, what just happened here? Okay. Okay, the market open. They jumped substantially. Okay. I don't know why they jumped, but you can see here this is the coronavirus dip. If you look at here, going to March, February, start to drop and then dip, and then bam, we are skyrocketing from here. This is almost every stock you look at today will have something similar to this. It's not a guarantee, but it does look similar. Now, but I'm going to go back to my simulator and look at my portfolio. So, in my portfolio, I've got Wells Fargo and Company. Once this trade completes for 1,000 shares, we should be good. And then that'll change my buying power here. Okay. Now, I put a quarter of my money into this, which is what I would consider more of a stable buy, right? I don't see this stock going down any further unless coronavirus cripples the entire nation's economy entirely. That being said, let's look at another more speculative buy on my part, right? So, I'm looking at a stock that has recently stock research. Here we go. AMD has gone up again. What it looks like it's gone up again. Sitting around that $77 area. Sorrento Therapeutics, that's SRNE. That's gone ahead and done some movement here. And Apple's gotten another million shares that's been done just this early morning. So the stock that I'm going to look for is the Marathon Oil Company. And see what that comes up with. Or let me go ahead and find the ticker for this Marathon Oil. Now, looking at Marathon Oil, which is MRO, Marathon Oil is another one of those heavily beat down stocks currently. It's a heavily beat down stock currently because all of your energy stocks are beat down currently with the price of. Let's go back for a second. The price of oil is low. Nobody's driving right now due to coronavirus. But when things are beat down, they have a very high chance of getting back up, in a sense. So let's take a look at this Marathon Oil here. Um, we're gonna look at their earnings. Their earnings are gonna come up in two days. Do you want to sit and wait to buy for the earnings to buy it? The lowest this stock has been $3.16. Well, around $3.18 at the right after the outset of that coronavirus fall we see here beginning of March. Now at $5.42, this stock may take a long time to recover, or Marathon Oil may even go bankrupt. But this being said, where this stock was before the coronavirus hit, at about $11, even just at $10, there's potential to almost double one's money here. And with that being said, this is going to be one of my riskier plays because oil and energy is always a risky play. But if I get 1,000 shares here at $5.41, this may either lose me money or gain me money. But if it gains me money, it's still worth a shot in my opinion. Another oil company that I'm looking at, that's also been beaten down by Noble Energy, NBL. So earnings are coming out today for Noble Energy. It's already down on the market open, and we will find out what these earnings have in hold for. That's going to be a quarterly report. But I'm going to say that Noble Energy has the potential to also double. So I'm going to make some very risky energy plays here with Noble Energy as well as Marathon Oil. But this risk is not coming without a reward, right? Because if I do predict this correctly and things do return to pre-coronavirus prices, we're talking about doubling the money. Now, it would have been even better to have bought this stock here at the almost $4 or $5 range. It would have been $3.69. That would have been the best time to buy that stock, in my opinion. And that stock would have tripled in value by this time. However, I'm going to make this really risky play. I'm going to hopefully buy it before it gets to $10. So I'm going to go into the. Oh, we're going up. We're going up. I don't like that. So I'm going to get that $1,000, 1,000 shares trade. Okay, stock symbol MRO, Marathon Oil. I'm gonna buy that $1,000, 1,000 shares there, and I'm gonna do a market order on this, only a day order. We'll see what happens here, and we're gonna go ahead and preview order and submit the order. The other thing I'm going to do here is trade, and we are going to trade this second stock, which is we had Marathon Oil and we had Noble Energy. Noble Energy NBL. And this is going to, ooh, it's already, okay, we're down again, but I'm going to make a bet on this stock. I'm going to buy 1,000 shares here as well. I'm going to put a limit order on this at $10 because I don't want to pay more than $10 for this stock. And preview order, and submit order. Now, another stock that I've been looking at, kind of watching it with the coronavirus, it has been the Cars.com stock. And Cars.com may not seem like something that, people would even think much of, but Cars.com actually has been gaining little by little ever since the coronavirus, due to the fact that less people are shopping for vehicles face to face. They're pushing more towards the used car market because people have lost their jobs. There's not as much money floating around for the brand new cars, but Cars.com sells the used cars, right? So you got this going on where you've got a little bit of push and pull from different forces that are leading to Cars.com. The online shopping, the online market, the online delivery, as opposed to having to sit in a car dealership. There's a lot of that going on now with coronavirus, that whereas before we didn't have that going on. So what I'm going to do now is I'm going to go take a look at this Cars.com stock and see what comes out of it. And I'm going to go ahead and do this research on a separate tab. So we're going to look up Cars.com stock, right? I guess the ticker is CARS. Okay, go back CARS. Search for that. Okay. I'm going to change things up here, and I'm going to go into Google. Okay, so here we are, Cars.com stock. Actually, it took off like a rocket today based on these what it's showing with the market summary here on Google. And what I'm going to do is I'm going to look at the 5-year for this stock. So here in 2019, we had a huge drop in the stock's value. I don't know what happened there in 2019, but I'm not sure if I should be completely concerned about that. Then you have stock value going up, and then you have a huge drop with coronavirus, and then you have the stock kind of leading up here. So I may want to do some more research and find out exactly what this stock did to drop that much in this period of time at the end of 2019, in the middle of 2019. But here you have the earnings call came out yesterday. Let's look at this earnings call transcript for Cars.com and find out. Okay. Oh, there are 13 pages. Okay. Um, what I'm gonna do is I'm gonna pull up that PowerPoint he's got available. Let's see what slides he's got. Okay, cars.com. This is what the slides are. Forward-looking statements. Let's see what we got here. Competitive strengths and stay-at-home market. Yeah, okay. Rebound in new car sales and pricing. Well, you saw a dip here for the coronavirus, and the sales are still slowly creeping back up. Rebounding used car sales and pricing. You see, the used car sales are definitely back up to where they were. They're probably even going up. They're up 102% since March. You can see that. The traffic actually. So you see, there's an extra 25% people going to cars.com on the website versus last year, which is very interesting. But this is also a side effect of coronavirus. People not wanting to be out there coughing and getting sick. Dealer customer momentum before COVID-19. Strategy is different and clear. Wow. So the dealerships are selling more cars by appointment for this coronavirus deal. Okay, so they're talking that they're using cars.com to push dealers. Okay. Sustainable organic traffic. Okay, financial highlights. Okay, quarter two 2020 versus 2019. So you're going to see that they have actually lost money here. But, so the net loss of income, and that's due to coronavirus, but they're going to be gaining that back shortly. Adjusted net income. But they're seeing more traffic and more unique visitors to the website. More 75% of that traffic is mobile, somebody checking on their phones. Balance flow. Okay, they've still got cash. They've got debt. Total. Okay. So they're leveraged fairly. 4x leverage. Okay. So what I would do is I'm not going to jump in as heavily into cars.com as I did with the other ones. I'm going to actually do 200 shares of cars.com. Why? I don't want to expose myself to too much fluctuations here. Market. Oh yeah, I have to take a market price. And it's only a day order. 835. Okay. And submit order. There we go. And this is where I'm going to take a moment. There's one more stock I've been looking at that I wanted to kind of get a feel on, and I'm not sure if I would purchase this in my day-to-day life, but the stock that I've been looking at here has kind of piqued my interest, and I'd like to track it. So what I'm going to do is I'm going to have it on the simulator, and if I come to it, I'll probably purchase it in real life. So I'm going to take a look at this thing, this company called Vivint Solar. So one of the things that's been happening more is you got more people involved in this, looking at things from that side, from the side of things being a little interesting, where they want to get into solar, they want to get into renewable energy, they want to go live off grid, these kinds of things. Okay, symbol lookup for Vivint Solar. Okay, there are no results for this. That's interesting. Which means it's probably not on these. That's strange. Okay, one that I will look up is DAL, Delta Airlines. Delta Airlines has taken huge hit in the advent of the coronavirus and not as many people flying around. So I'm going to go over here and look up Delta Airlines stock through Google. So we see Delta Airlines stock is down to 24.57. With a 52-week low of 17.51. Let's look back over the year. You can see here that we take that huge coronavirus hit, and then we're slowly trying to climb back up, but we're not really making progress here because until borders are opened up and the coronavirus is under control, Delta might not see that value. But let's look at the 5 year. Okay, 5 years they kind of done about the same price. They've gone through a little bit of a downturn here, a little bit of an upturn. Looking at Delta Airlines, I can see myself purchasing about 200 shares of this. Why 200? I can see there's a huge upside, but this is going to be one of those long waits. It's going to come back, but it might take a while. So I'm going to go ahead here and trade DAL, Delta Airlines, 200. Day order. And I'm going to go ahead and preview this. Okay. Submit orders. And I'm going to go ahead and look at my open trades now. Get the total of my open trades and find out what kind of money I've got sitting. So this is 200. No, that's 1,000. So that's $25,000. Math on oil, roughly $6. So that'd be 30,000. $10, 40,000. Cars.com at roughly $8. It's gonna be 1,600. In Delta Airlines, it's roughly $25. It's gonna be roughly 5,000 almost. Yeah, it's 5,000. So 5,000, 1,600, 6,600, 10,000, 16,600, 100,000 at Marathon Oil at about $10. Well, MR at actually about $5. That's going to be 21,000. Oh, it was close to $6. So we're going to say 22,000, and here 24. So we just put in about $48,000 worth of stock orders, and these are all pending. So we'll see what happens here. Um, let's take a look at that. There's another company I was looking at that I may want to invest in, but it's heavily expensive right now. But this company has been doing extremely well since the beginning of the coronavirus. The name of the company is DocuSign. DocuSign is that company that allows you to sign things from far away. And we look at them here, and DocuSign has been doing amazingly. So you look at the 1 year, right after that coronavirus dip, they've been taking off like a rocket. Now, I'm not going to say that this is the best time to buy DocuSign, but for the foreseeable future, DocuSign seems like it'll continue to grow because it it provides an alternative to having to have someone in front of you that makes your values, that makes it simpler for somebody to sign in front of you. What I'm going to do here, because of the price of this stock, I'm only going to buy an even lot, which is nope, I can't even buy an even lot. I'm going to buy 10 shares of this. That's what I'm going to do. 10 shares, because that'll put me at $2,000. 10 shares of this. I'm looking at it going, okay, let's look at 5 years. 5 years, also steady growth. Well, actually, it was kind of stagnant up until you have this coronavirus hitch and it's taken off. I'm going to go ahead and buy 10 shares of DocuSign if I'm allowed to buy 10 shares of DocuSign in the simulator. Ten shares. And we're going to do a market order on that. And good. Nope, not good till canceled. And day order. Let's see what we come up with. That's interesting. Overstock.com went up, but and I'm also gonna counterplay myself a little bit. You've got a lot of people right now who are spending money on what you call um, precious metal stocks or mining companies, right? So I'm gonna go ahead and look at this. Avino Gold is a gold mining company. Avino Silver and Gold stock. And they are sitting here at just about $1 when they came up from 26 cents within the past year. Now, because of the amount of uncertainty in the market, gold stocks have been taking a spike upwards. And this is a very speculative move here as well. Um, Going back 5 years, I can see that the stock actually had a period right around. Oh, this was leading into the presidential election. We did see a spike in people that were worried about the economy and people seeing that the election might not. Yeah, going into the election, they were worried about the economy. So gold prices generally spike when people are afraid of what's going to happen to the economy. So this is one of those things that I'm not sure if I'm going to be able to put my money behind it though. That's so as of right now I've got about $50,000 worth of stock right now. Um, I'm going to go ahead and stop for the day. If you guys have any questions, any stock recommendations, anything if you guys want to join the game, go ahead and join the simulator that we have here. It's investipedia.com/simulator/game/invite.aspx question game equals 535450, or the game could be or if you're looking in the Investopedia public games, it's Simulator Ebon Noblesse, or Ebon Noblesse, depending on how you decide to pronounce it. Thank you guys for watching. I'm going to go ahead and get this money moving, and hopefully we all get our money right.